Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Monday, February 5th, 2018. And here are some of today's trends in the news. And what a day it is. Will it be that day that lives in financial infamy? Well, we'll see. On the market front, over there in Asia, Nikkei down. Shanghai's up a little bit. Hang Seng down. Europe down. U.S. down big time. Dow down over 4.5%. NASDAQ down. Oil down. Gold up a little bit. And Bitcoin, bada boom, bing, bam. All those cryptos, one after another, all going much, much lower. So what's going on? Dow plunges 1,175 points in wild trading. S&P 500 goes negative for 2018. So, the sell-off, what's causing it? Let's go back to Friday. Those job numbers came in, and they were better than expected. They're worried about inflation. They're worried about wages going up. Whoa, hey, the plantation owners can't make a lot of dough if them wages go up. Can't have that. No, no, no. So that's what started to bring the markets down, because they say they're going to raise interest rates more because of the strong economy. So when the markets went down on Friday, this was the news over the weekend in the Wall Street Journal and other business media. Investors fear broader asset fall. Yep. And again, even though this was the biggest point drop ever today, when you put it into perspective, considering how high the numbers are, the percentage isn't, not even close. So anyway, what happens is when you have a big downturn on Friday, this has been going on for years, you could count on Monday not being so good. And now we're looking at the Dow futures, and they're down already today about 5% as we're going on air. So tomorrow doesn't look like a very rosy day, but that could change in 24 hours. So let's look at the whole story. Very important. First of all, as TrendsJournal subscribers, you knew this was coming. Just go to your Fall Trends Journal. Read all about it. Globalnomic End-Year Report. We see a correction of up to 10% next year, meaning this year. So we're getting close to that. And we say minus a wild card, it could go much higher. Go back to your June trend alert. That's right, 2017. Pundits got Trump rally wrong. What's next? And we said that there was going to be a Trump rally. We began saying that immediately after Trump got elected in 2016. And we saw a rally of about 30% since. So this thing's been really booming up. So what's going on? We said in our trend forecast, we forecast a 10% market correction. Trump's wild card behavior could trigger significant downward spirals in the global market. And then, following that, in our summer Trends Journal, there will be a U.S. stock market correction of about 10%. But absent a wild card, a market crash. So why don't we see the market crashing at this time? Here we go. Corporate earnings shine amid turmoil. Among S&P 500 companies, 80% have exceeded revenue expectations so far. Going back to gold. Gold went up today, but not big time. if there was really panic on the streets, that thing would have flown up. So watch gold. If gold crosses that 1400 level, boop, watch it closely, because it has to go over 1450 to really gain strength. Then you're looking at a real market meltdown. Also, cryptocurrencies went down. Well, how come? Well, China's cracking down even harder now, not allowing transactions going out overseas. Last week again, India said they're cracking down. And then we saw a number of big banks saying, no, you can't use your credit cards to buy cryptos. So this is the real pressure on that market. However, having said that, if there was great fear of this market crashing, cryptos along with gold, we forecast, will go up. Oil prices, well, they went down a little bit because now they're signaling a weaker market segment globally. Because as goes the Dow, so goes the rest of the global equity markets. And again, with the markets going down like this and so sharply so soon, and losing this much percentage so quickly, you're not going to see any big interest rate rises, man. Ain't going to happen. No way, no how, especially with Powell taking Yellen's place. Powell was put in there by Trump. Yellen was an Obama pick. So Powell is not going to go against Trump. Oh, they're independent of the government. Yeah, grow up. So again, there's pressure on the global markets. In China, hot stocks cool down. Chinese stocks had their worst week since 2016, with fresh concerns about Beijing's campaign to cut financial risks and predictions of a slowing economy, helping erase half of the market's last year to date gains in just a few days. So again, there's concern globally. So they'll keep that cheap money going in, because if they don't, the markets go down. And again, what brought the markets down on Friday? Pay surge adds weight to U.S. recovery. Wage growth in the United States last month accelerated to the quickest pace since 2009, as quicker economic growth and a tightening job markets forced more employers to pay up to attract scarcer labor. Anyway, nevertheless, if wage growth and inflation pick up further, it could prompt calls for 4 rate increases this year rather than the 3 plugged into Fed policy makers' forecasts for 2018. So you see where this is going. It's all about interest rates. And how dare you have to pay the plantation workers more money in Slavelandia. That cuts into the rich people's profits. So there we go. That's really it with the markets. As goes interest rates, go the markets. Again, the markets, everybody knows it. They are highly valued and overvalued. So here is our forecast. Can there be a market crash? When all else fails, they take you to war. So watch the geopolitical occurrences, because if things heat up in the Middle East, this will crash the markets. It'll get your mind off the markets as you go to war. Number 2, earnings are solid. So there's strength in the marketplace for it to keep going. Number 3, we believe the markets have peaked. The upside is very small. The downside is very big. We believe we're going to go into a slowly growing market in 2018. Again, the upside is not that big. The downside is very big, because there were the geopolitical unrest, and with wild cards, and Trump being the wildest of wild cards we've ever seen as someone in office, This thing could go anywhere. And again, it's about wild cards. It's about fear, hysteria, and overreaction. From the Financial Times, investors need their wits about them at a treacherous junction. If any of a number of actors misjudges or tries to do things too fast, then there certainly is a risk of a crash. To navigate it, we need to understand where we started. The world has had very low interest rates ever since the 2008 financial crisis. End of story, period, paragraph. They're all freaking out, even though Trump is giving the corporations a big break by lowering their taxes from 35% to 21% and pushing more money that'll go into stock buybacks. They're concerned that the cheap money flow will stop if interest rates go too high. So, what else do we have? Well, on the international front, United States officials rejected a claim by Pakistan that the strike had targeted an Afghan refugee camp, and it wasn't about getting that militant. You know, they always brag, oh, yeah, we got a militant with a drone strike. A leading militant. Like that was going to change anything? Has it changed anything? How many militants have they killed? You know what this is, don't you?
That was bullshit.
Total bullshit. A statement by Pakistan's minister condemned the strike and maintained that it had targeted an Afghan refugee camp and killed dozens of innocent people. But that's, it's in a refugee camp. Who cares? And other news, scientists find jawbone in Israel of earliest modern human out of Africa. They said that this jawbone found in a collapsed cave goes back 194,000 years ago. A human jawbone. 194,000 years ago. In Israel. Now, wait a minute. They say this was written 1300 BC. So let's get this straight. The Promised Land was first made to Abraham, Genesis 15, 18-21, paragraph 3, section 8. The promise is fulfilled at the end of the Exodus from Egypt. See, I have given you this land. Go in and take possession of this land that the Lord swore he would give to your fathers, to Abraham, Isaac, and Jacob, and to Netanyahu, and to Golda Meir, and to Ben-Gurion, and everybody else, and their descendants after them, you see? Now, let me get this straight. This jawbone was found, to believe, going back 194,000 years ago. This was written, I just read you, in 1300 BC. So there are like 191,000 years of missed history in here. But those are only little details, because we know that God was a real estate agent and the Bible was a land deed. The proof is right here. So, tomorrow is a new day in the market front. Again, as we're going to press right now, we're finding out that the Dow Jones futures are down some 5%. Will it be a market crash or a market correction? Stay tuned. This is Gerald Celente, and that's some of today's trends in the news.